Let's talk about money in today's session. The last two sessions, I was talking about, do you know how to measure your ROI? And also, do you have an objective when you attend networking events? And the last session, I talk about, do you know how to measure your ROI for all your marketing dollars that you invest in your business, regardless whether it's mentorship or it's buying a software or hiring a salesperson or social media person. So today we're going to talk about how to manage your business finance or business finance 101. It's very interesting that I still get questions like that. And I can totally understand that because they are new entrepreneurs and that's why they don't know what is what and what they need to do. I recently got a question asked by an event designer if she should open a bank account under her LLC. That means I'm going to use myself as an example. All right. My company name is M2 Hospitality or M Square. All right. M2 Hospitality LLC. That's my event planning company name. And when I open a business bank account, that business bank account is going to be under my LLC's name called M2 Hospitality. That means any payment made to my company when a client decide or potential client decides to hire me to perform event planning services, event design services, event production, okay, whatever, when they hire me to do the events and they make the payment, they will make the payment to M2 Hospitality LLC, okay? So if they were to wire the money into my bank account, it will be to M2 Hospitality LLC. They write a check, it will be M2 Hospitality LLC. They are not going to be writing a check or they will not be sending me money through Zelle to my personal account. So when you open your business bank account, it has to be under your LLC's name or your company's name that you register with your state. And all payments and all your invoice has that company name. So on my invoice to all my clients, it will always say M2 Hospitality LLC. So when they are doing the accounting, my clients are doing the accounting, they will use my invoice to justify that this is a business write-off for them, all right? Or a marketing expense because they receive an invoice from a legit company and they're writing a check or a payment to a legit company. So when I receive the payment, it will be to my company name, okay? And that's how you should be setting up your business bank account. I have had transactions that I use on my personal card, sometimes by mistake, sometimes by strategy. Like for instance, okay, my personal credit card has got many perks when it comes to travel, all right? Whereas my business credit card does not have that many perks compared to my personal credit card. When I travel, even for business, okay, when I travel, even for business, when I buy air tickets, especially when I buy air tickets, I will use my personal credit card to purchase the business flight, okay? That means a trip that I'm taking for business, an air ticket that I'm purchasing for business. And then immediately, I will transfer money from my business account to my own personal account to pay off to the personal account, right? Because I use my personal credit card. So I will use the business bank account and I will transfer money to my personal bank account to show in accounting terms to show that I'm paying my personal bank account for the purchase of this business trip, okay? Your accountant probably will tell you, don't do that, okay? Don't do that. Just use your business credit card because it's cleaner. Now, I absolutely agree with my accountant's advice, but because I travel so much, all right, for business, and I would want to be able to take advantage of the perks that my credit card is giving me. So I keep a very clean transaction history, okay? So every time, like today, I bought the air ticket with my personal credit card. Immediately, I transfer the money from my business account to my personal credit card, and I keep a log. So when I send my accounting notes to my bookkeeper, she will know why am I taking money from my business bank account to my personal bank account and not write that off as owner's distribution, okay? It is not a profit. It is paying off a transaction that I use my personal credit card for. I only do that for travel. Everything else, I will always use my business credit card just to keep the transaction clean, right? So if I were to pump gas into my car, I will use my business credit card. All right, I wouldn't use my personal credit card, even though I do have a credit card that gives me more perks than my business credit card when it comes to pumping gas. But that amount is so small, I don't want to raise more red flags with IRS. All right, so I pick and choose my battle, put it this way. Okay, so I want to talk about money for today's session also because some of you may have already filed for your taxes and you have already received the returns, okay? IRS owe you money, so you may receive money back. Now, this is your hard-earned money, okay, that you have been overpaying to IRS, okay? Overpaying to IRS, and now they are returning you the excess funds. My suggestion is, again, I want to do a disclaimer. I'm not a financial planner. I'm not an accountant. I'm not a tax attorney. I do this for my business and I'm not doing it well enough. I should be more diligent, okay? Is when you pay your taxes, right? When you're paying your taxes, you need to do an estimation. This is a conversation that you should have with your accountant. Every time you receive revenue from your business, okay? When you receive revenue from your business, you should put aside a certain percentage of that revenue to pay taxes. Minimum 20%, okay? I think 20% is a good benchmark because when you're paying at 20%, the likelihood of you owing money to IRS at the end of the year probably will not be that high, and you probably will get a little bit of money back. If you have a full-time job and you also have your business, 20% may not be enough. You may want to go to, depending on how much your business is bringing in, because now you have dual income. You may want to put aside maybe 21 to 22%. But the goal here is you put aside money to pay your tax, okay? But you don't want to put aside so much money that you don't have enough capital left to invest back into your business. And also letting IRS have so much access of your money where you could have used this money to invest in your business or personal investments or savings, okay, where you can earn more interest than sitting in IRS bank, all right? So have a conversation with your accountant. What is a good number that you should be putting aside? I would say 20% is good, because if you were to owe IRS money at the end of the year because you didn't put more than 20%, you probably owe them maybe 1 or 2% more, okay, max 5% more. But the money that you have kept, instead of overpaying IRS, if you have invested it in your business wisely or in your personal investment, you would have gotten a lot more returns than letting it sit in IRS. That's just my 2 cents, okay? That's how I handle my finance. That's how my husband handled his finance. So just a little tip for you. But you must put aside money to pay taxes. Now, assuming that you're getting money back, all right, from IRS, and then you have all this money, what is the first thing that most people tend to do? All right, most people tend to do is they spend the money, right? They spend the money, they go on a big vacation, they make big purchase, they're waiting for this IRS return to buy something. This is not a bad thing, okay? This is not a bad thing as long as you know where your money is going. For me, I've always learned, okay, that when you receive money that you can spend, okay, that you can spend, all right, you have to think, is there any debts that I need to pay off first? All right. Any debts that is not a good debt. All right. That you can pay off first, like your credit card debt. All right. What can you pay off first? And then next thing is, after you pay off, right? The next thing is, how much should I save and how much should I invest? Okay. How much should I save? How much should I invest? And how much should I spend? Right? So normally I put it to 30, 30, 30. So whatever money that is left after I pay off any debts, I'll think about 30% save, 30% spend, 30% give. Okay. So if you got nobody to give the money to, then that give and the save will come together, or the give and the save will go to spend. Oh, the give will go to the spend. So maybe you can just only split to 50-50. Okay, 50 save, 50 spend, because you got nobody to give it to. All right. Then you have to start thinking, okay, if you want to buy something, you want to go on a vacation, you cannot blow it all away, because if you're trying to build a business, capital is extremely important. You want to be able to have some form of extra money left to invest back into your business. I learned in networking events, in retreats, in master retreats, in summits, where I surround myself with 7, 8, 9-figure entrepreneurs, as I mentioned, okay, in 2 episodes before, that I'm very intentional when I network. I try not to be in a room with people who is at the same level or is still going through the level that I already been through in terms of business. I want to be in a room where people are already way ahead in front of me, so I can learn all these tips and tricks from them. How do they manage their money? How do they not pay that much tax, etc., etc.? How do they manage their funds? Where do they invest their money? So these are one of the things that I learned. Okay, when you have money and you want to spend, it should be spending on assets where you can bring in more money from that investment, not a liability. Buying a car is not, it's not, unless you're like my husband, who likes exotic cars. He will buy exotic cars, he will drive it, and then, he will have his own method of buying the exotic car at a value that he knows is going to appreciate, and then he will sell it after a year or two and make money, right? So that's an exception. But like for me, I have an expensive car. Is it an asset? No, it is not. It's a liability, okay? I use it for my business. Yes, it makes me feel good. It goes very fast. It's very steady. Okay, it's very safe, but it is not bringing more money for me. If I buy a Louis Vuitton bag, yes, it satisfies me. It satisfies my desire. Go buy it if it makes you happy. Okay, like I have enough already of Louis Vuitton and Prada, etc., etc. So I will not be spending money on buying more. I will be thinking how to use this money to grow my business, personal investment, and also business investment. So you want to think about that. All right. Now, let's go deeper, especially for those of you who are decorators, okay? And who not only just charge for your fees, but you charge for the whole event budget. This is a question that I get asked a lot, and I make this mistake when I first started my business, and I end up paying IRS $20,000. So this is what happens when I work with a particular client. Sometimes this client, they want me to manage the entire event budget. So this entire event budget, if let's say this entire event budget is $100,000, and out of the $100,000, $20,000 is my fee. Okay, so they will pay me one whole lump sum of $100,000. You internally must know that this $100,000 is sitting in your bank. It's not all yours. It is $20,000 is yours, and the $80,000 is for event budget. Okay, to pay for vendors, rentals, venues, anything that's related to the event. So how do you keep track of all this money going in and out? So at the end of the year, okay, at the end of the year, you do not show all this money in your bank as revenue. So what happened to M2 Hospitality, my event planning company, was I had a business partner at that point in time. All right. And there wasn't enough due diligence done on that. And I have to be accountable for that, because I cannot just say that that person did not do a good job, because I'm also part owner. I should have double checked, okay, which I did not. And it's a very expensive lesson. All right. And I will always remember this lesson. So what happened was, this is exactly the scenario. The client paid me $100,000. Okay. $20,000 is my fee. $80,000 is the event budget. At the end of the year, that my account show a lot of money, but we did not tell the accountant that the $80,000 is actually not revenue. It's not income. It's not profit. It is actually an event budget belonging to a client. So we end up getting taxed a lot more, because IRS saw all this revenue in there or profit in there, so they tax us. So that was a bad mistake. And eventually I buy out the ownership. So I own M2 Hospitality 100% from that point onwards. And I work with a different accountant, and the accountant taught me to open a separate bank account under my main business account. So I have a checking account under my company, and then I have a checking account that is just to put in all my fees, so I can see how am I tracking in terms of my revenue, okay, in terms of my revenue. And then I have another checking account that is just to hold on to all those clients' events budget, okay? So every time I receive a chunk of money come in, right, let's say $100,000, $20,000 is mine. $20,000 is my fee. I will immediately transfer the $20,000 into one of the umbrella checking accounts, okay, under the main checking account, business checking account. I will transfer the $20,000 into a separate checking account that I name it revenue, M2 event planning fees, or whatever, however you want to name it, okay? And then I have a third checking account where it houses all the clients' budget, okay? Thank God I only have one client that requires me to do all that, because the rest of my clients, they pay the vendors themselves, and they only pay me direct, just my fees. So it's very clean. But I do have sometimes one or two clients who give me the whole chunk of money. And then I will have to make sure that I understand that this chunk of money here, that's called client's budget, part of it belongs to client A, part of it belongs to client B, which you have to be so diligent in keeping track of that, okay? So you do not mistaken that you have all this money in your bank account and then start buying stuff, all right? So I will immediately transfer the $20,000 into the checking account that says M2 event planning fees, revenue, and then the balance I'll go into the third checking account, which is the client's budget. Okay, so there's no commingling of funds. And then the main checking account is for in and out, paying the business bills. So every time I want to invest, okay, in my business, every time I want to invest in my business, I have to look at the checking account where it says M2 revenue, event planning revenue. I will have to look at that and see how much money is there in there. Okay. And how much money or working capital I have left in the main checking account that I use to pay bills. I always try to make sure that the main checking account where I use to pay bills, etc., will be enough to last at least 3 months. 3 months of money, okay, in there, capital in there, that can pay the business bills without any income coming in. So if let's say my business bills, okay, my business bills is $5,000 every month. Okay, let's just say it's $5,000. Actually, it's more than, it's 10,000. Okay, because I have to pay myself salary too. So it's $10,000. Okay, every month. My business expense is $10,000 every month. I need to make sure that I have at least $30,000 sitting in that checking account. Now, is that the wise move? Nobody can say yes or no, because in reality, if you think about it, $30,000, if I know that my account is $10,000 out every month, okay, what do I still need the $20,000 there, right? If I'm continuously bringing money in every single month to make sure that I have at least $10,000 there, whereas the other $20,000 I could use to go invest somewhere else to make me more money. But I'm a little conservative about that. So I will keep at least $30,000 in that checking account, okay? So I can pay my business expense for 3 months without worrying if there's a single dime coming in for the business. Okay. Then I will look at, these are the daily bills, okay? The business expense that you must incur. We're not talking about investments into let's say buying a ticket to, or buying a ticket to attend a retreat or networking event, or buying a new software, okay, or hiring a social media manager. No, it's not. I'm not talking about that. I'm talking about your fees that you have to pay every single month, your salary, your website domain, your software bills, all those things, okay? Then if I have an opportunity for me to attend a retreat or a business convention where my potential clients will be there, I will start looking at my personal, my business account, okay? My business account, M2 hospitality event planning fee, where I put in the $20,000, I start looking at that. No, just know that even though I get paid $20,000, $20,000 is not going to just sit there, okay? Because out of that $20,000, remember, I need to take out 20% to pay Uncle Sam, right? I need to make sure that I put that money out to somewhere else. It could be into your personal savings account so that you cannot touch to pay Uncle Sam. And then the others stay in there. Okay, for me, I put the rest in there because I'm already being paid salary from my main checking account. So the rest of the money, the rest of the 80% stays in there. And I can decide what I want to do with the 80%. I can decide that, I want to, in addition to my salary, I want to do a 20% owner's draw. So I can just transfer now 20% from the 20,000 into my personal account as owner's distribution. Or, and then when I receive the owner's distribution, I will separate it into, okay, now I receive this money, I'm going to put it some into my savings account for emergency funds, and some to for my play fund, and some for investments. Okay, so you can do however you want, but that's how I do it. And then whatever is remaining in there, I know it can be used for investing in my business. Okay, so let's just do the math. If I have 20%, $20,000 in there, right? So $20,000, so I do 20%. So that's $4,000 I will put into, that's quite a bit of money, okay? $4,000 I will put into my personal savings account for Uncle Sam, okay? And then another $4,000, okay, I will transfer to my own personal account as my owner's distribution. And that $4,000, I will separate that into play fund, emergency fund, and investments, okay? So now I have left $12,000 in that M2 hospitality revenue account, okay, which is under my business account. So this $12,000 is how much I have left that I know that I can invest back into my business, all right? So I will always make sure that I have some of it always as working capital, okay, working capital. So you can say that, okay, I already have 3 months working capital in my main checking account. So $12,000, okay, maybe I want to take 50% of that $12,000 to continue to build up my working capital. And then the rest can be used to invest in marketing, labor, technology. This is just an example, okay? I know it's a lot of moving the money around, but you have to be so clear how you are going to use that money and disperse the money. If not, you will see this money and you will immediately start thinking you have all this money that you can invest in your business at one particular time. And when a better opportunity comes for investment, then you do not have the money. So you need to, at the very beginning of the year, or actually at the last quarter of the year, you already need to be thinking, next year, where am I going to be spending the money in terms of investment? Am I going to hire a social media manager? Am I going to hire a branding manager? Am I going to hire a website designer? Am I going to attend 2 trade shows as a vendor? Am I going to attend 2 retreats? So you should already have your marketing plan and your sales plan in place, okay? Expansion plan in place, and already have an idea how much money you need for the business in order to invest in all these activities, okay? So when the money comes, you already have an idea where to spend that money. And then you have to prioritize which of these activity or investment is going to get me the fastest growth or elevates the biggest pain in the butt for you, like the website design. Launching your new website is a pain in the butt for you. Doing social media on a regular basis is a pain in the butt for you. So all this, if you think that is going to alleviate the pain and the stress of you running your business, then those are your priority, okay? And then we have to make sure how to measure the ROI, which I talked about that in the last 2 sessions, okay? So those are your priorities. So when the money comes in first, you need to set aside the money to make sure that you have enough to invest in those priority marketing investments. All right. If you don't do that, every time you see something, a new shiny object, you want to invest, you want to invest, you want to buy, you want to invest, right? But you don't have a clear goal. If this investment is going to bring you direct ROI, a quick ROI, is it a long-term ROI, is it intangible ROI? What does your business need at this point in time in order to know what investments to make so that you can get a quick ROI? Or do you require a long-term ROI? You can wait for a long-term ROI, or you are looking for intangible ROI, which is basically knowledge-based, okay? So you have to know, you have to do your homework. What are you going to do to grow your business? So you have all these marketing activities that you have written down, and you know exactly where the money should be going and when you should start investing so that you can start saving when the money comes in, or start investing into the right marketing activities when it comes in, okay? Hopefully, today's session gave you some ideas on how to manage your business finance, the most strategic manner, and how to take care of yourself, right? Because you work so hard for this money. How do you take care of yourself so that you can make more money with the money that you earn, and to satisfy your desire, buy your bag, go on a vacation, okay? Spend it on loved ones, however you want to do it, because at the end of the day, you can bring this money to the coffin, right? But don't spend it recklessly where you don't have enough money to invest back into your business, which is your golden goose. You have to make sure that you feed your golden goose fat and round so that you can continue to grow more money for you, okay? As I always say, make sure that if every single episode resonates with you, right? You listen to a particular episode, it resonates with you, share it with your other fellow entrepreneurs, eventrepreneurs. Give me a rating, give me a review, okay? Subscribe to my channel. And every end of the session, I always have a CTA. So this CTA, we're going to talk about, this call to action. I want you to check out my book. Okay. Oh, actually, no, not check out my book. We talked about that already. Let's maybe follow me on my social media. Okay. Follow me more on my social media. Go to the show notes and follow me on my social media so that you can continue to learn more, get inspired and get motivated and take action, because I'm in your corner, giving you the push and giving you the strategies and the tactics. And I believe in you. So you need to start believing in yourself as well. Talk to you again next week.